Hi, Jim Gore from THOR Investment Management. We are all seeing headlines about inflation now coming back into the market, and actually we at THOR have been concerned about inflation for the last year or 2 years. The reason for that is the Federal Reserve has been lax in their duties. They should have been raising rates 2 years ago, and right now short-term rates should be anywhere between 3 and 4%. There's a great video documentary out there called Money for Nothing. And we recommend that you take the time to look at this because it'll tell you what happens within the Federal Reserve and shows that every financial crisis has been caused by the Federal Reserve, even the things that they try to fix. Now, inflation is coming back, and we are seeing it here from our clients, as well as Mark does a fish fry for his local church, and he has seen costs go up this year anywhere from 5 to 26% on the goods that they need for the fish fry. Inflation is also going to go up from the trucking industry, which right now they're going to have on April 1st, all trucks are going to have electronic logging devices in their trucks, which is going to limit the amount of hours that they can spend on the road. We already have a trucking driver shortage, so what this means is we're going to have increased costs to get your things delivered, and actually inside the ports right now, we are seeing some delays because of this electronic logging device. Why is inflation important? Because if inflation goes up, bond investors will demand more money from their investments, which means interest rates are going to go up. We have a great example of that here in this chart. If you look at this chart, it looks at the 10-year Treasury notes have increased their yield from about 2.42% at the beginning of this year to 2.92%. So 0.5%. Doesn't seem that high of an increase in interest rates. But look at the value of the iShares 20-plus year Treasury bond ETF. If you held that from the beginning of the year, you can see it is down. It's actually down 6.7%. If you got a little bit longer dated bond fund like the Vanguard Extended Duration, it's actually down 9.2%. So people have lost a lot more money in bonds this year than the stock market. Speaking of the stock market, the reason why interest rates going up is important is because bonds will eventually compete against stocks. 2 years ago, you would hear people say, I'm going to invest in stocks because I'm getting a higher yield in treasuries. Now, actually, a 2-year treasury is yielding more than the S&P 500. So you're going to see more competition for stocks, which means inflation goes up, interest rates go up. It's going to impact stocks negatively, and it's something that you have to watch out for. We at THOR, because inflation is going up, have a lot of our investments in alternatives that are geared towards protection against inflation, as well as having overseas investments, because if inflation goes up in the United States, the dollar will continue to fall, which means our overseas investments will be worth more money in US dollars.